Despite bulls' efforts to turn things around, neither the European currency nor the British pound managed to resume gains. The euro was temporarily buoyed by rumors that the European Central Bank would unveil more aggressive measures and raise interest rates by 50 basis points. In addition, it was supported by expectations that China would ease its coronavirus curbs. Against this background, demand for risky assets rebounded slightly. Nevertheless, the euro failed to settle at daily highs and came under pressure again. After all, market participants expect the US Federal Reserve to announce plans to further tighten monetary policy next week. As for the pound sterling, the situation was similar. After reaching 1.2265, the price saw a major sell-off and hit a new local low. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. It includes data on Germany's industrial production. The indicator is forecast to decline by 0.6% in October, following an increase by 0.6% in September. Traders may also take notice of speeches by ECB members. The focus of market participants will be on the third quarter gross domestic product for the euro area. The Eurozone economy is expected to grow by 0.2% quarter-on-quarter and 2.1% on an annual basis. If the readings are in line with analysts' forecasts or turned out to be worse than expected, pressure on the euro will mount. As for statistics from the United States, investors may pay attention to non-farm productivity. However, this report will hardly have a severe impact on market sentiment. Although today's macroeconomic calendar is bereft of any important releases from the US, volatility will probably remain elevated and the euro will keep losing ground. From a technical point of view, the 1-hour Euro-American dollar chart shows that 1.0439 acts as the nearest support level. A false breakout at this mark will create a buy signal. Bulls need to regain control of 1.0482. After all, the second daily drop in a row increases the probability of a more dramatic sell-off in the European currency at the end of the week. If the price rises above 1.0482 and tests it from the top down, the volume of long positions will increase. In this case, the euro will have a chance of returning to 1.0525 and even 1.0566. At the level of 1.0566, it will be possible to open short positions on a rebound with a view to catching an intraday correction of 25-30 pips. Of course, the best way to go short is to enter the market amid a false breakout at 1.0482. Alternatively, if the price breaks through and fixes below 1.0439, the euro will extend losses and slide to 1.0395. At this level, it would be a wise decision to go long on a rebound, counting on an intraday correction of 25-30 pips. Long positions at 1.0439 can be considered only amid a false breakout. Speaking of the British pound, the situation is uncertain. Britain continues to experience widespread industrial unrest as workers struggling with high inflation resort to strike action to demand better pay and working conditions. Against this background, the pound sterling keeps moving downwards. Long positions can be opened only amid a false breakout in case the price dips to 1.2071. Alternatively, one can go long on a rebound at 1.1999 with a view to catching an intraday correction of 40-45 pips. The crucial task of bulls will be to take control of 1.2146. If the price consolidates above this level and tests it from the top down, a buy signal will be generated. In this case, the British pound will advance to 1.2201 and 1.2265. At the level of 1.2265, I recommend going short on a rebound. Short positions at 1.2146 and 1.2201 will be relevant only in the event of a false breakout in the hope of a continued downtrend initiated on December 5th. Best of luck!